A quiet but significant trend is steadily reshaping the North American economic landscape, unfolding largely out of the spotlight. While headlines are dominated by stories of trade disputes and political tensions, a more subtle migration is underway. American companies are increasingly looking north to Canada for new opportunities and stability. From nimble tech startups to established manufacturing giants, U.S. firms are not just expanding operations, but also relocating headquarters and shifting key personnel across the border in growing numbers. This isn't a random occurrence. It's a calculated business strategy, one that signals deeper, underlying issues within the U.S. economy and a search for more favorable conditions. For decades, the U.S. was the global magnet for talent and capital, with the American dream drawing the best and brightest from around the world, including many from Canada itself. Now, the flow is reversing. Highly skilled professionals and international talent are increasingly choosing Canadian cities like Toronto and Vancouver over traditional American hubs such as Silicon Valley and New York, attracted by new opportunities and a different quality of life. The scale of this shift is growing too large to ignore, with more companies and individuals making the move each year. Recent data shows a marked increase in both American investment and talent migration into Canada, reflecting a broader transformation in North American business dynamics. The perceived advantages of operating in the U.S., from market size to innovation, are diminishing as challenges mount and new risks emerge. What's driving this? It's a story of push and pull. U.S. policies, rising costs, and economic uncertainty are pushing companies away, while Canada's stability, incentives, and welcoming environment are pulling them in. Companies don't make these moves lightly. It's a fundamental reassessment of where future growth and innovation are most likely to thrive. This trend has major implications for American prosperity, competitiveness, and global economic leadership, potentially altering the balance of power in the region. In this series, we'll explore the drivers behind this migration, the consequences for both nations, and what it means for the future of North America's economy. The stakes are high, and the outcome could fundamentally reshape North America's economic landscape for decades to come. Let's dive in and uncover the forces at play. Canada's appeal to American businesses goes far beyond just its proximity or shared border. It's a country that offers a unique blend of opportunity, efficiency, and innovation that's hard to find elsewhere. Its streamlined immigration systems, like the Global Skills Strategy, allow companies to hire top global talent in a matter of weeks, not years. This means businesses can quickly fill critical roles and stay ahead in fast-moving industries. In contrast, U.S. immigration is often slow, unpredictable, and filled with red tape, making Canada a haven for tech firms and startups seeking the world's best engineers, researchers, and innovators. Operational costs are lower too. Canada's single-payer healthcare system saves employers thousands of dollars per employee every year, reducing the burden of private insurance and administrative headaches. Wages are competitive, but overall labor costs in key sectors are often lower than in major U.S. cities, making it easier for companies to scale and invest in their people. The Canadian government actively fosters innovation with generous R&D tax credits and grants, making it especially attractive for companies to base high-value research and development activities there. Social and political stability is another major draw. Canada's collaborative business climate and robust public institutions offer predictability and security for long-term investments, which is crucial for sustainable growth. For CEOs and business leaders, this stability premium is invaluable, reducing risk and enabling confident, forward-looking planning for the future. Canada isn't just a place to cut costs. It's a place to build the future, foster innovation, and create lasting impact in a supportive environment. That's why more and more U.S. companies are making the move north, choosing Canada as their new home for growth and opportunity. The push factors in the U.S. are just as powerful as Canada's pull. America's immigration system is a major hurdle. Limited visas and endless backlogs make it hard for companies to hire global talent. Soaring costs in cities like San Francisco and New York, high salaries, real estate, and healthcare add to the burden. Political and regulatory uncertainty makes long-term planning risky, with shifting trade policies and sudden regulatory changes. Businesses crave predictability, and the U.S. is offering less of it. Quality of life concerns, crumbling infrastructure, inequality, and social unrest make it harder to attract and retain top employees. Canadian cities, by contrast, often rank higher in global quality of life indices. For companies whose main asset is people, these factors are decisive. The result, a growing exodus of talent and investment. The migration isn't random, it's highly concentrated in sectors like tech and advanced manufacturing, and it's happening in specific Canadian cities that have become magnets for innovation and growth. Tech giants such as Google, Amazon, and Microsoft have rapidly expanded their presence in Toronto and Vancouver, drawn by deep talent pools, thriving startup scenes, and robust innovation ecosystems that foster collaboration and creativity. The Toronto-Waterloo Corridor is now recognized as one of North America's fastest-growing tech markets, especially in cutting-edge fields like artificial intelligence and quantum computing, attracting both startups and established firms. Vancouver has emerged as a global hub for visual effects, animation, and gaming, thanks to generous tax credits, a creative workforce, and its strategic proximity to the U.S. West Coast, making it a top destination for digital media companies. Montreal is a magnet for AI research and development, while Quebec and Ontario continue to benefit from significant aerospace and automotive investment, fueling job growth and technological advancement in these provinces. Manufacturing firms are increasingly drawn by Canada's stable supply chains, highly skilled labor force, and seamless access to global markets through a network of international trade agreements, making it an attractive base for global operations. Calgary is actively pivoting from its traditional oil roots to embrace clean tech and agri-tech, leveraging its world-class engineering talent and fostering innovation in sustainable industries. These moves are highly strategic. U.S. companies are deliberately targeting Canadian centers of excellence that align with their long-term goals, seeking out regions with specialized expertise and supportive business environments. Ultimately, it's not just about leaving the U.S. It's about being drawn to Canada's unique strengths, diverse talent, and the promise of new opportunities in a rapidly evolving global economy. Every company that relocates or expands in Canada means lost jobs and opportunities for U.S. communities. These aren't just numbers, they're high-paying tech and manufacturing roles that could have revitalized American towns. The ripple effect is real. Each lost tech job means fewer local service jobs, lower property values, and stagnating small businesses. Cities hoping for new investment are left with empty lots and dashed hopes. The trend deepens regional inequalities as struggling areas lose out while a few superstar cities thrive. Brain drain accelerates. Talented young professionals follow the jobs north, leaving behind aging populations and shrinking tax bases. The loss of human capital undermines innovation and community vitality. As talent leaves, regions become less attractive to new businesses, creating a vicious cycle. The long-term result: hollowed out communities and a less dynamic U.S. economy. The stakes for American towns and cities couldn't be higher. The corporate migration north is eroding U.S. tax revenues at every level. Profits from relocated operations are taxed in Canada, not the U.S., shrinking the American corporate tax base. High-paying jobs lost to Canada mean less personal income tax for federal and state governments. Local governments miss out on property and sales taxes from new campuses and well-paid employees. As revenues fall, public services suffer, or taxes rise for those who remain, making the U.S. even less attractive for business. This creates a dangerous feedback loop, accelerating the exodus. The solution isn't plugging revenue gaps after the fact, it's making the U.S. competitive again. For Canada, the influx of U.S. companies and talent is a major economic win. Thousands of high-quality jobs in AI, fintech, and life sciences are created, helping Canada retain its own graduates and attract global talent. Local ecosystems thrive as major firms stimulate demand for services and support startups. The cluster effect accelerates innovation and entrepreneurship, fueling a construction boom and boosting tax revenues. Governments can reinvest in healthcare, transit, and education, creating a virtuous cycle that attracts even more investment. Canada's global reputation rises, drawing further foreign direct investment from Europe and Asia. The endorsement from U.S. firms signals to the world that Canada is a premier destination for talent and capital. This is more than a short-term gain. It's a foundation for long-term prosperity. Real-world examples show how this trend is playing out. In Toronto, Google and Microsoft have built major hubs, drawn by top AI talent and fewer visa headaches. Vancouver and Montreal have become global centers for visual effects, thanks to tax credits and skilled artists. Hollywood blockbusters are now made in Canada, shifting creative investment north. In manufacturing, Canada is building a robust electric vehicle supply chain, from mineral processing to component manufacturing. Government incentives and trade stability make Canada a strategic choice for green tech. These moves are calculated. Companies are chasing talent, cost savings, and stability. Each relocation is a loss for U.S. growth and a gain for Canada's future. The northward migration of U.S. companies is a clear signal of shifting economic realities. Canada's business environment, streamlined immigration, lower costs, R&D incentives, and stability is winning the competition for talent and investment. Meanwhile, U.S. challenges, immigration hurdles, high costs, and policy volatility are driving companies away. The result is a slow-motion hollowing out of the American economy, lost jobs, eroded tax bases, and stagnating communities. For Canada, it's a golden opportunity to lead in the knowledge economy. The movement is strategic, not accidental, driven by deliberate policy choices on both sides. America's competitive edge is slipping, not by chance, but by consequence. The silent exodus is a warning sign. Capital and talent go where they're treated best. The real question: what will it take for the U.S. to reverse this trend and reclaim its place as the top destination for innovation and growth? The answer will shape the future of North American prosperity.